I see an expeditious march to neutral by the end of the year.
We have to consider which sanction hurts and hits Putin's war chest.
Cold War mentality would only wreck the global peace framework.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Here's what's coming up on today's program. The ECB's hawkishness goes mainstream. The central bank's vice president, de Guindos, is the latest that suggests that a rate hike before July is possible. Xi Jinping defends his COVID-0 strategy. The Chinese president also takes veiled shots at the U.S. sanctions campaign against Russia. And today, with Bloomberg Surveillance Early Edition, this hour we speak to the co-founder of Moderna, Noubar Afeyan. You can send in your questions on IB plus TV Go. Now, first thing is first, so let's check in on the markets. And if you look at U.S. indice futures, you can see they're actually seeing a lift. It's a different story than it was yesterday. NASDAQ futures gaining some 1%. There's a bit more optimism for another strong earnings season report, while a sell-off in treasuries resumed with a debate raging on, of course, about whether inflation is peaking or not. That inflation debate also filtering through to Europe. We not only had Pierre Wunsch say that he could see interest rates at the ECB in positive territory by the end of the year, but we heard de Guindos, so there does seem to be a general hawkishness filtering through a lot of the ECB Governing Council member. We hear later today from Jay Powell and Christine Lagarde. You can see European stocks actually gaining some 0.4%. A lot of the movement that's going on today is on the FX space. Euro dollar 109.24. And as the ECB gets more hawkish, of course, watch out for some of those German bonds. If we look at the individual countries, the FTSE is pretty much flat. The DAX gaining some 1%. It was one of the biggest losers yesterday. The CAC 40 gaining some 1.4%. Now, what I'm surprised on the CAC 40 is that we have a big election on Sunday. We had a debate yesterday between Marine Le Pen and Emmanuel Macron. Not much in terms of movement for the polls, but actually it's a very tight race, and it's certainly not being priced in when we also talk about nationalization. If Marine Le Pen of certain companies, of course, if she were to become president, it's not really priced in when it comes to a lot of these equity stocks. Now, hawkishness going mainstream. The ECB's de Guindos has become the fourth and latest official to signal an end to QE. Traders are now betting on 3/4 point hikes from the ECB this year, after Pierre Wunsch also echoed hawkish sentiments in a Bloomberg scoop.
We're going to stop EPP, and I think we are going to hike. For me, unless there would be a big shock in the economy that we have not foreseen. And of course, the uncertainty is big with the war in Ukraine. But I believe without any really bad news coming from that front, hiking by the end of this year to zero or like slightly positive territory for me would be a no-brainer.
So let's get into the key market drivers with our markets editor, Christina Aquino. Christine, ECB, quite a lot going on with money markets now pricing 3 ECB quarter-point rate hikes in 2022. I mean, the market's really shifted on that one pretty quickly.
Absolutely, Francine. It really took just the past week when they were initially disappointed by President Lagarde's remarks last week at the policy decision, because she was very, very measured. But then over the course of that week, we really saw more of this hawkishness coming out from other governing council members, and markets finally getting on board with this idea that ECB is going to hike, and the ECB is going to hike multiple times this year to finally exit that zero rate level that they've been in since forever.
I mean, forever. It feels like forever.
It
There
does
are
feel
people
like
on
forever,
trading
doesn't
floors
it?
that have never seen inflation. I'm a little bit older, so I have. All right, Treasury bulls versus bears. Where are we?
Well, Francine, it's still very early days, but we are seeing those calls now coming through, calling the top on these Treasury yields. I think that was really prompted by what we saw with the positive real yields. I mean, of course, they were only temporarily positive, and we haven't gotten an extension there. But I guess it was a momentous occasion in some respect, because this idea that bonds will finally offer something to compensate investors for inflation was attractive enough for some. But, yields are up again today, of course, because it's still constantly a battle between how fast the Federal Reserve is going to hike versus the sort of Fed fatigue that markets have been experiencing of late, and whether we really kind of hit that diminishing returns when it comes to Fed speakers impacting yields. I think it's really going to come down to May when the Fed is going to have to do something or deal with the consequences of that?
I mean, I have a million questions. First, there's no alternative. At some point, there's going to be an alternative. So I don't know what that means for yield. So we continue looking at treasuries pre-market. I think we have a couple of figures or numbers that we need to look at. We're looking at Tesla pre-market. In general, when you look at NASDAQ futures, they're gaining 1%. I mean, we also need to talk about China and this U.S. It feels like it's a story of divergence, full stop.
Absolutely, Francine, and in a number of different ways. And today, the way that that's playing out is very much in the tech sector because, you know, if you contrast the results of Tesla, fantastic results, of course, and a lot of optimism that they're going to be able to overcome those supply chain disruptions. And then when you look at EV makers in China, same thing, though. You know, it's supply chain disruptions, largely the story there, but the sentiment is really, really negative. I think that's basically a result of what we're seeing more broadly in China, of course, going towards deceleration in the economy and, of course, the impact of those lockdowns really taking a toll.
Christine, thank you so much. Christine Aquino there, a markets editor. So let's do those. I think we have the pre-market boards. We look at Tesla. We had a great roundup of also Craig Trudell telling us exactly what Elon Musk's next move could be. The fact that it is actually not as easy as Musk puts it out there because of the factory in China, the fact that supply chains will still be hit. But pre-market, Tesla gaining some 7.3%. Now joining us to talk about the markets, to talk about real yields and the impact overall in stocks, Christian Muller-Gleesman, Managing Director for Portfolio Strategy and Asset Allocation at Goldman Sachs International. Christian, as always, thank you so much for joining us. I mean, the million-dollar question, how much of a rotation will this continue? What does this mean for stocks? Are you expecting a correction?
Yeah, I mean, listen, it's the big question we're having. I think we had a lot of investors buying equities to get exposure to real assets, to get kind of, as you were saying, there is no alternative getting yield, a real yield in a world of negative real yields. And now we start to see the real yield being more positive. So the question obviously pops up, do you still need these type of elevated equity exposures, these type of real asset exposures? But I think what's worth keeping in mind is that the yield differential is still very much in favor of equities, of course. I mean, we're talking about like 1.6% dividend yield on the S&P, earnings yields obviously much higher, and 3% in Europe. So I think that the yield cushion is probably still in favor of equities, but the most important thing is that equities can give you a kind of claim on nominal growth. So with that in mind, equities still have that inflation hedging capability, which bonds don't have. And that means that the equity risk premium could actually be much lower in the coming years compared to the last cycle, where you had deflation. And that's why it's so difficult right now to say that this higher real yield is already likely to trigger significant rotation back to bonds. I think that's a bit too early. Tactically, however, a lot of discussion about recession risk, and if you could at least
I was going to ask you
your correction.
Yeah, I was going to ask you, Christian. So first of all, how do you look at this market implied probability of a recession, and like the probability, in my eyes, of a policy mistake from central banks right now seems quite high.
Yeah, I mean, this is the key debate now. Are you going to get, like, tactically a very difficult setup for a longer-term playbook, which is still supportive for equity? And I think we've looked at this a bit. So recession probability modeling is very difficult, as we all know. We looked at a few leading variables, a few kind of coincident variables. The short story is, coincident variables, which are mostly risky assets, they are not telling you that there's a lot of recession risk being priced right now. If you look at some of the more famous leading ones, like the yield curve or like cyclicals versus defensives valuations, they are starting to flash a bit of a signal. So the probability they're giving us for the next 12 months that you get a recession is probably around 30 to 40%. But the important thing is that we found in asset allocation, these levels you're currently getting are not consistent enough. So a lot of indicators are actually telling you not that high risk yet. And you have to be careful to be too early in terms of adjusting portfolios.
So you remain overweight equities at the moment in your asset allocation. What would make you change that?
Yeah, listen, I mean, on aggregate, our recession probability, including all the indicators, is currently around 20-25%. At 40%, that is usually when you want to really think about downgrading risk in a more forceful way. That's when the left tail risk, the big correction risk, as you were asking, that's when that picks up. So we're not quite there yet, but that can go quickly. So I think if we do see in particular breadth in the indicators emerging, So it's not just the yield curve, it's not just the cyclical versus defensives, but you start to see credit spreads react. If you start to see kind of, for example, the Fed fund futures pricing with regards to pricing the first cut in the next 12 months, that actually is a very reliable signal in the past. Currently, that curve is pricing the first cut probably in 18 to 20 months. So you're still not quite there where we would say it's really a clear signal with regards to recession risk. But there are other reasons why equities could have a choppy time, no? Just Q2 being very disappointing with regards to growth could mean that equities are a bit fat and flat, irrespective of recession risk.
And Christian, I want to talk a little bit about earnings per share and, of course, the cyclical versus defensive valuation. Valuation is definitely the key in all of this. Christian Müller-Gleesman, their managing director for portfolio strategy at asset allocation at Goldman Sachs, stays with us. We'll be back with him in just a couple of minutes. Now, coming up later on in the program, we also speak exclusively to the co-founder of Moderna. He's Noubar Afeyan. You can send in your questions on IB Plus TV Go. This is Bloomberg.
Stance that does not stimulate the economy that has clearly demonstrated it can self-sustain is a top priority. And this is where the question of timing comes in. How quickly should we get there? So accounting for the risks of being too fast or too slow, I see an expeditious march to neutral by the end of the year as the prudent path.
Well, that was the San Francisco president, Mary Daly, saying that the U.S. Central Bank should move purposefully and raise interest rates to neutral by year-end. Now, still with us, Christian Müller-Gleesman, managing director for portfolio strategy and asset allocation at Goldman Sachs. I think I invented a new title for you, managing portfolio, Christian. When you look at the cyclical versus defensive valuation, I mean, this is probably one of the most interesting things in the market. Like, how will those shift, and what do they tell us about the broader assets?
Yeah, I mean, I mentioned it earlier. So if you look at that seems to be the most bearish indicator right now, even more bearish with regards to the yield curve in terms of what we can expect for growth and recession risk. But to some extent, it might also be a bit distorted because in particular, the defensive part of that has been incredibly resilient in the face of rising real rates. And you could actually see that indicator kind of see some relief just by virtue of defensive parts of the market catching up a bit with real yields. We've seen that across the board. Gold has held up much better than real yields. Defensive sectors within equities have held up much better than real yields. It just seems that markets have an inherent bearishness on growth right now already embedded, which is maybe a bit too early. As I said earlier, I think we can talk about recession risk, and I think that's certainly a topic for next year in terms of the occurrence and for something the market might have to price in the second half.
Is it because market are basically looking at central banks and saying at some point they'll have to choose, and we see this with the Fed, they'll have to choose, whether to deal with inflation or sustain employment, and basically it's these opposing forces that the market struggle to make way with?
No, I totally agree. I think there is this perception in the market that the Fed has to engineer a financial conditions tightening to kind of get in control of inflation, and that financial conditions tightening will mean a severe growth slowdown, which is very difficult to control, to engineer a soft landing, and that's why there's this inherent defensiveness in the market. But that also creates a low hurdle rate in the near term to surprise to the upside. Because this process of the Fed slowing down the economy is taking time. So if you look at the earnings season so far, you actually see a lot of the cyclicals, they've surprised to the upside, and stocks have rallied with relatively small surprises. So it tells us in the near term, maybe the market is a bit too bullish on defensives and possibly some of the secular growth names as well. We've seen that with some of the secular growth names missing results, being punished heavily, but they may be a bit too bearish on the cyclical names.
Christian, what are you expecting this earnings season? So I don't know whether earnings per share forecasts overall for the year are too optimistic, or they can still, if you focus on margins, some of the other things, it'll be okay this time.
It's a really good question. I think at the margin, we've been downgrading our earnings growth forecasts quite a bit in function of the Russia-Ukraine crisis, cost input pressures, of course, and eventually there's going to be much more focus on pricing power. And I think our equity strategy teams, they've been very focused on capturing that more on a sector and on a thematic level. For the index level, what does it mean? I think we're looking at mid-single-digit earnings growth in most markets with a bit of downside, but not that much downside based on what we know right now. I mean, obviously, recession would change things around, but with what we know right now, there's some offsets because you have commodity earnings being boosted, of course. You have like financials earnings having done reasonably well. So net, I think mid-single-digit is a decent base case, but it will be really interesting because the higher real yields go, the more earnings growth you need to sustain an equity overweight. So I think would be interesting. The more earnings growth comes under pressure, it also puts a bit of a question mark with regards to being too bullish equities.
Christian, we're running out of time. I want to ask you about Japan, but I also want to ask you about China. And China is probably the most important. What are markets misunderstanding about China right now? How impacted will growth be?
Listen, we have a major lockdown still going on, and our economists have highlighted that based on their effective lockdown index, China is now by far seeing the biggest drag on growth, as you can imagine. We see it in the commodity demand. We see it starting to enter a bit the policy easing side via the currency. So I think the Chinese currency has been a bit weaker recently, and I think that's been a key discussion point in the last few days with clients of ours, where we're just wondering if this is the beginning of a bit more of a deflationary shock here, where China starts to devalue the currency, and that could actually provide a bit of relief on inflation in the first instance, but longer term maybe create concerns again with regards to China deval risk. But outside of that, I think, no, we're just dealing with a growth drag here, which is lingering. And I think that will affect certain parts exposed to that.
Christian, thanks so much. As always, Christian Müller-Gleesman there. He's Managing Director for Portfolio Strategy and Asset Allocation at Goldman Sachs. Now, coming up, the path ahead for sanctions on Russia. Our interview with Germany's Finance Minister, Christian Lindner, is next. This is Bloomberg.
We are standing ready for further sanctions on Russia. We strongly support all sanctions which isolate Russia politically and economically. Well, we have to consider which sanction hurts and hits Putin's war chest and which sanction in the short term hurts us more than him. And all sanctions which now and for the foreseeable future hurt him more than us as international community, we are in full support of. And when it comes to coal, to oil, to commodities, raw materials and natural gas, you have to differentiate the timetable and the schedule. I think coal and oil is faster possible than, for example, natural gas.
I spoke to a European official 20 minutes ago, and they said Germany is still the holdout on oil. Is there an openness to potentially work around direct sanctions of oil, maybe freezing the funds or putting to an escrow account?
Well, there are talks in the European Union. We are preparing the sixth sanction package on financial measures, on oil. So we are in an open debate. For us, it's crucial to hurt Putin's war chest more than we affect our own people and economies.
So you are open to oil being included?
Well, it depends on the timetable and the question, how can we reduce our dependency on Russian oil imports, the faster the better.
That was Germany's Finance Minister Christian Lindner speaking to our Anne-Marie Hordern about the path ahead for sanctions on Russia. Now let's get straight to the Bloomberg First Word News. Here is Leanne Gerrans. Hi, Leanne.
Hi, Francine. Billionaire investor Bill Ackman has lost more than $430 million on a 3-month bet on Netflix. Ackman's Pershing Square Capital Management sold its Netflix holdings after the streaming pioneer reported an unexpected drop in customers. Shares plunged 35% on Wednesday. Now, Wimbledon has barred Russian and Belarusian competitors from this year's tennis tournament in a response to the war in Ukraine. Event organizers say they had a responsibility to limit Russia's global influence. The ATP, which governs men's professional tennis, took issue with the decision, calling it unfair and arguing Wimbledon had agreed entry should be based solely on rankings. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thanks so much. Coming up, co-founder of biotech company Moderna, Dr. Noubar Afeyan. That exclusive interview up next. You can send in your questions. And this is Bloomberg. The ECB's hawkishness goes mainstream. The central bank's vice president, the Guindos, is the latest to suggest that a rate hike before July is possible. Xi Jinping defends his COVID-0 strategy. The Chinese president also takes veiled shots at the U.S. sanctions campaign against Russia. And stay with Bloomberg Surveillance Early Edition. Up next, we speak to the co-founder of Moderna, Noubar Afeyan. You can send in your questions on IB Plus TV Go. So good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. First thing is first, as always, 9:30 UK time, so we check the markets. Today, the market's actually getting a bit of a lift. There is more and more optimism for another strong earnings season's quarter. We saw also a sell-off in treasuries, resuming with the debate raging about whether inflation is peaking. Now, I would suggest everything that will move the markets will be inflation related. A little bit later, we hear from Christine Lagarde of the ECB. We'll also hear from Jay Powell of the Fed. They're both at the IMF in Washington. But there does seem to be a general sense of hawkishness. We heard it from the vice president. We heard it from the Belgian central bank governor, who's also on the governing council. And if we do go into positive territory by the end of the year, that will move, of course, a lot of the bond yields and in turn could move stocks. You can see the German 2-year yield 0.157. Now, Noubar Afeyan is best known for co-founding the U.S. biotechnology company Moderna, which developed one of the mRNA COVID vaccines. He also co-founded Omega Therapeutics and Celerity. He's a visiting lecturer at Harvard Business School and still finds time to sit on the boards of the MIT Corporation and the Boston Symphony Orchestra. Well, Dr. Noubar Afeyan, thank you so much for joining us. We're going to have a good conversation on COVID vaccinations, but actually Flagship in general. So thank you for, first of all, coming to London and in the studio. When you look at Flagship and what you're trying to do at the moment, what's the next phase? So you deliver this mRNA. It's been 2 years of COVID. What are you focusing your attention on next?
Well, Francine, first, it's great to be here, also in person in the studio. Flagship is a company that is building many, many platform companies in the biotechnology industry. And so there's a lot of exciting new developments coming out of our newfound understandings of disease. We are creating new combination platforms between computation and new types of drugs, new types of diagnostics. So there's a whole range of very exciting things going on. If anything, innovation is accelerating. We're making very big leaps. So that work continues to go on.
Innovation thanks almost to mRNA, or is it innovation that would have happened anyway that maybe was delayed because of COVID?
Well, what the mRNA platform did is to show the world the power of platforms. It really has not been the case in biotechnology that there is such a thing as a platform. That is a common tool that can be used for many, many different programs. That is both enabling new programs, but also serving as an example for other platforms that we're developing that we expect will have a similar effect. One set of investments coming up with dozens of new products.
How has, and I know I've asked you a number of times during the COVID pandemic, and I wonder whether it's changed. How has our relationship, but also the government's relationship with healthcare changed? On the positive, I guess we're much more aware of it. On the negatives, you have many more people that are anti-vaxxers.
Well, yeah, that's those are the two extremes of what governments are responsible for. Is to really provide for a level of health security, which we recognized 2 years ago, and what we've gone through the last 2 years was relatively a low level of health security that we were afforded. And I hope that this pandemic will cause us to elevate our level of health security, particularly in advance of another threat. But on the other hand, as you said, it's been highly politicized, and as a result, people feel like it's some political expression as to whether they want to wear a mask or not, take a vaccine or not. And of course, if you lived on your own, that's a really good individual choice. But if you live within a community, within a society, then your ability to infect and impact the health of others is quite dramatic, as we've seen. And you're right. Not only do we have to think about the present, but also in the near future, when the long effects of COVID, afflicting millions of people, is going to add to our healthcare burden.
How has COVID changed you as a chief executive and founder?
Well, it's tested us. It has shown us the possibility of what people can do, what groups of dedicated people can do in terms of coming up with scientific solutions to global problems. It's also caused us to see the best in government-private sector partnerships. One wonders why in peacetime, from a health standpoint, we can't do the same kind of partnerships to advance treatments the way we were able to in the last 2 years. So it's given us lots of optimism.
Why can we not? Is it funding? Is it focus? Because people are focusing on other things. And if you're a government and you're dealing with inflation, you say, well, why do I spend money in healthcare where actually I need to fight these fires first?
Well, we're spending more and more money on healthcare inevitably, and so I think whether we like it or not, that cost is going up. So we either deal with it and try to address ways to take it down, or we ignore it and it's going to keep going up. I think the bigger issue of why not, as you said, is there's a level of distraction, but also there's this notion that in health we have to avoid doing anything that in any way represents any risk. Unfortunately, our deteriorating health is a far greater risk than the risk we're trying to avoid in coming up with new treatments and new ways to intervene. So I do think this pandemic should cause us to stand back and say, what is the responsibility a government has to its populace? Is it to avoid any kind of risk, or is it to provide more benefit than risk in each situation?
But this is risk management. And so is it because health experts within governments were not used to risk manage like they did the defense spending, or how do you explain that?
I think that the parallel with defense is something that's worth studying. I do think that our physical security, which is something that governments spend enormous amounts of money on and do a reasonably effective job at, should be an example for our health security. And if we're guaranteed health security, the way we would intervene with things, not waiting for diseases to be advanced before we'll do anything about them, would be thought of the same way we now think of wars. We don't just make expensive weapons, we try to go upstream. So I do think that lessons are plentiful in this recent experience. I worry that people are so tired and they want to get on with the next challenge ahead of them that they will basically miss the moment to learn. I think this pandemic could change the arc of how healthcare is done, but we're right in the moment where we may lose it or we may capture the moment.
But this goes back what to government spending. Are you here to try and get the government to look at health differently and diagnose, I guess, disease before we become sick?
So what you're referring to is an initiative we started even before the pandemic. We call this preemptive health and preemptive medicine. And the idea is, instead of waiting for late-stage disease, can we use the same technologies developed by tens of billions of investments over the last decades and move it way upstream so we could see a disease in its active formation and we could intervene with them.
I mean, this is before. Is it like gene therapy? Is it looking at gene or not necessarily?
It turns out, so of course, if you go to the earliest of early, you may have genetic predispositions to disease. That's a small fraction of the diseases we can now catch. We can think about pre-diseases like diabetes, other inflammatory diseases, Parkinson's, Alzheimer's. There is a pre-disease condition, cancer. If you look at colon cancer, where we've had a huge effect, most of the effect we've had is because we can catch things before they become cancerous, polyps. The same can be done in a molecular way for every other disease. Imagine if we put some amount of investment in that, what kind of returns that can generate in delaying or completely deflecting disease.
Yeah, it always goes back to spending.
Yes.
Remember, when you look at flagship, what's your next Moderna?
Hard for me to classify something as Moderna because Moderna wasn't Moderna until it emerged to be able to impact the world. But I can tell you there's many great exciting companies. Just yesterday, we announced a significant capital raise in one of our companies called Tessera, which is developing a whole new set of gene writing technologies. The world has been filled with reports on gene editing recently. This is an ability to write genes very precisely to correct disease states. That's a very exciting new development. There's several other ones that are coming along very, very rapidly. So and as well in the sustainability area, where we also are bringing to bear these very advanced life science technologies.
So do you need a crisis to test them?
No, not really. Well, there is a slow way to testing them today.
Yeah.
I'd hate to believe that the only way to go faster is with a crisis. And so that's the question is, can we make the benefits of the crisis outlast the crisis? And that requires governments to really reconsider, well, actually evaluate all the things they got right, instead of just focusing on all the things they got wrong, because right in front of us are government-led actions that have shown ways to develop vaccines in months or a year without taking any shortcuts. Why would another vaccine not be developed that way, or every vaccine be developed that way?
But with skepticism also for a big chunk of the population. So we'll talk a little bit more about that, and we'll talk a little bit about maybe a fourth booster shot, or some of the new vaccines they're working on. The Moderna chairman and co-founder Noubar Afeyan stays with us. Coming up, we continue our conversation with Noubar, and then later on the program, of course, it's the second round of the French presidential election. It takes place this Sunday. This show will be in Paris. We're also live on Sunday evening, so we'll look ahead to what promises to be a very tight race between Emmanuel Macron and Marine Le Pen. That's live from Paris, and this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance, early edition. I'm Francine Lacqua here in London. Now, still with us, Dr. Noubar Afeyan, co-founder and chairman of Moderna. Dr. Afeyan, thank you so much for sticking around. We had a good conversation about, some of the things that governments can do, maybe not to let this crisis go to waste, which is, the number one rule when you go through something so big. But talk to me a little bit about the biotech route. So we had, really an explosion of stocks in biotech. What does it mean for Flagship and your portfolio in general? Is this an opportunity, or is it something that makes you worry?
So look, biotech first and foremost is a long game, in the sense that drug development, these are people's lives that are at stake, and it's historically been one that has gone through periods of expansion, followed by some periods of contraction. And again, this is the 35th year I've been working as an entrepreneur in biotech, and having seen a number of these cycles, I view what's going on as a direct result of the recent past. But more importantly, we're against a backdrop now, which is not biotech specific, but very broad in tech. It's in general. Yeah. I think the key is to focus on what makes these companies impactful, create partnerships with large companies and pharmaceutical companies, and from there build again, so that the winners, if you will, or the real powerful platforms emerge stronger out of this environment. And that's what we're seeing. Right now we're in the middle of it, so we're busy working on every single opportunity and what can be done to really stick to your core values.
So what you're telling me is ignore the noise. It's basically not look too much at the share price. It doesn't mean that you could buy something or even hire some of the scientists easier.
I think, well, it's quite ironic in that rents have never been higher in biotech. Finding employees has never been harder in biotech, ever, against a backdrop where the stock market values it differently than it did before. We'll see which one corrects to the other, but the reality is there is a lot of value out there, a lot of value, with strong teams and broad diversified pipelines. One of the things you see in biotech is when things get overheated, there's a lot of single shots on goal that represent themselves as companies. Those ones are more vulnerable because they really have nothing to retreat to. If one product has one bad news, the company is in very big trouble.
Why this mismatch?
I mean, the mismatch is a bit contextual, but also strategies that people are using. Again, I think if you think this is a long game, investing in companies that have many, many different outlets for some products that they're developing are a safer bet, because they can outlast these kinds of periods. And that's what we focus a lot on as a result of having been at this for such a long time.
Where are we on COVID? So you have China with a very different, zero tolerance policy, and they're continuing with this and don't seem to be relenting. Here in Europe, hardly any people even wear masks. What's the right approach?
I've said from the beginning, from the very first time we spoke about this, that the whole COVID situation is a battle royale, if I can call it that, between one life form and another. The virus is basically got its own mind, and it really couldn't care less what we tolerate, what we don't tolerate. Basically, it will infect through social contact a vast swath of people, and it is mutating in order to overcome our immune response. So what we do as people, we're running many different experiments. Everybody's deciding to do what they want to do. It's been highly politicized. And I think what's playing out is this continued battle between our defenses and the offense that the virus can mount. Hard to say what is right. What is important is to recognize that we're not living individually, and whether people wear masks or not impacts other people's lives. And so this notion, I was on a flight over from the US just the moments when the mask mandate was removed.
Oh, you were on the flight when they announced?
I got on a flight and they said people don't have to wear masks. And people, in a celebratory way, all took off their masks. The reality is on that flight, just based on statistics, there were immunocompromised people who were exposed. I wore a mask because I felt like I'm not flying on my own. I'm flying with a large group of people. So I think people are going to have to realize, why were we doing these things? Just because the government told us to, or because we're still under quite a bit of continued threat? I'm not saying it's the same level of threat. So I think everybody's going to have to kind of make decisions that are based on weighing risk and reward. And I worry right now that it's all being done like a pendulum swing, one extreme to the other.
So the right thing is maybe somewhere in the middle.
Yes.
Will we get a fourth? I mean, do you think we'll need a fourth booster shot?
Definitely a fourth booster shot has been recommended for certainly folks over 50 in the US, and in other countries they're making their own decisions, and that's what should happen. People should look at the facts and make their own determination. For me, as I've stated publicly, after being boosted a third time, ultimately succumbed to getting infected. No. And that just shows that on the one hand, the vaccine is not going to prevent any form of infection. On the other hand, when I got infected, I saw the full effect of the therapeutic value of the vaccine, which is that the T cells and B cells in my body got to work, and within 3 or 4 days, so I think that is an important thing. The vaccines are having a huge therapeutic effect, not only a prophylactic effect.
But so do you feel? I mean, do you feel like you're better protected now after having gotten it with 2 vaccine shots and a booster than if you had a fourth booster? Like, how should we look at this?
I think what's been clear scientifically, and the data really should drive our decisions. The data shows that after a few months, our frontline defense with antibodies diminishes, so we're more vulnerable to infection. Once we get infected, our defenses to fight back the infection are there. So fourth boosters should be taken by folks who want to avoid infection as much as possible. And it's very clear there that the fourth booster significantly reduces the chance of getting yet again infected. But again, that will also wear out. I suspect this will land to where there'll be an annual booster. And just recently, for example, the last couple of days, Moderna announced some preliminary data showing that 2 of the different vaccines we have combined had much broader coverage than the original strain, and
which
we're
hasn't been
peer-reviewed
peer-reviewed yet, right?
It hasn't been peer-reviewed, but the data is the objective data. Over the last 2 years, all the data that's been coming out was coming out in real time.
So this is what exactly? An old type of COVID with the Delta one, and so it basically protects you for more strains?
So the experiments we revealed were the original 1273, which is what's called Spikevax now, combined with a beta-specific sequence. That showed broad coverage. We're now testing in humans an Omicron coupled with the original one together, so that by the fall, if all testing goes well, we'll be able to give much broader coverage net than we would with the original just single strain. And that, we think, is how things are going to develop, is that we're not going to go chase the next virus, but we want to expand the net of coverage.
All right, I need to go back to ancient Greek school, because I call it Delta instead of Beta. Thank you so much, Dr. Noubar Afeyan, co-founder and chairman of Moderna, there joining us in the studio. Now let's get straight to your Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Bill Ackman has ditched his stake in Netflix after losing more than $430 million on his investment in less than 3 months. Ackman's Pershing Square Capital Management sold its holdings after Netflix reported an unexpected drop in subscribers last quarter and projected an even steeper decline in the current one. Ackman was one of the streaming giant's 20 largest shareholders. Now, Tesla has reported better than expected first quarter results on strong demand for its electric vehicles. This comes as ongoing supply chain challenges and a COVID-19 lockdown in Shanghai crimps its production in China. Tesla saw profits totaling $3.22 a share. It is the first major U.S. automaker to report first quarter results. And that's your Bloomberg Business Flash. Francine.
Leanne, thanks so much. Coming up, 15.5 million people watched last last night's TV election debate, the only one ahead of Sunday's vote in the French presidential election. We'll bring you all of the details live from Paris. This is Bloomberg.
Why did you do it? And I say this with great gravity tonight, because for our country, this is bad news. Because you depend on the Russian power and you depend on Mr. Putin.
I truly want to make purchasing power the priority of my next 5-year term if the French have confidence in me.
Well, French President Emmanuel Macron and his nationalist opponent Marine Le Pen there. Now, the two candidates for the Élysée Palace went head-to-head last night in the only televised debate before the final round of the presidential election on Sunday. Macron warning his opponent risks starting a civil war with a ban on Muslim headscarves, while Le Pen meanwhile sought to portray the president as an elitist enthralled to global finance. Let's go live to Paris and Bloomberg's Kailey Leinz. Kailey, I was one of the Outre-mer watchers. I watched it from London. It was 2 hours and a half, boring at times, spicy at other times. Who performed better in the debate?
There was this poll, Francine, after the debate from Elab showing that about 59% of the French people who watched this debate thought Emmanuel Macron was the most convincing and had the best project between the two. However, Marine Le Pen appeared as the one with dealing with the issues of the French people, the daily concerns of the middle class. So clearly she appeared more composed and more comfortable than last time in 2017, and he made every effort to not sounding too technocratic and arrogant. But still, they had a few battles on different numbers, including inflation, growth, and a lot of punchlines, for example, on banning the headscarf in all public places, which is one proposal from Marine Le Pen that Emmanuel Macron described as an action of civil war. A lot of other punchlines we'll see over the next few days how this plays. There's only a couple of days of campaigning before the runoff on Sunday.
So, Kailey, how important was this debate? Were they trying to convince the undecided voter to vote for them? Like, who does the left vote for? The people that in the first round voted for Jean-Luc Mélenchon?
So, Jean-Luc Mélenchon came third in the first round, as you know, with nearly 8 million French voters. And this is clearly the voters that both Emmanuel Macron and Marine Le Pen are trying to attract in their camp. About 50% of those hard left-wing voters are planning to abstain in this runoff. But last night, actually, Emmanuel Macron performed better among Mélenchon's electorate, because about 60% of those who voted for him a couple of weeks ago said that he performed better and he was more convincing on issues including climate, which is obviously an issue that is very important for this left-wing electorate. On this issue of climate, for example, Marine Le Pen accused Emmanuel Macron of being hypocritical. Emmanuel Macron replied, well, you are skeptical about climate. So we'll see how this plays. There could be still a lot of abstention. On Sunday, there was 25% of abstention last time around. And there was some analysis from Goldman Sachs or Citigroup saying that there is still a chance, if abstention is really high, that Marine Le Pen could make it.
Yeah. All right, Kailey, thank you so much. Kailey in Paris will be joining Kailey also in Paris. So we'll be live with that beautiful back shot. Always a good idea, looking at the Eiffel Tower. And then we're also live on Sunday for 2 full hours to go through the election results with you. Don't miss it. It could be a game changer. It could move markets. So Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller and Kailey Leinz in New York, Anna Edwards in London. This is Bloomberg.
The world economy is facing some real serious challenges.
I am really worried about what we're going to see in terms of the economy in the second half of the year as rates go up.
There's nothing wrong with being a picky stock buyer in this environment.
When you get to the peak in growth, which could be, who knows, 3, 6, 9 months away, possibly even longer, then maybe some parts of tech start to look really interesting again.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kailey Leinz.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Thursday, April 21st. Our top stories today. Tesla shares jump in pre-market. Elon Musk's electric vehicle company reports a record profit and forecasts a big jump in production. Meanwhile, Musk's Boring company raises money at a valuation of nearly $6 billion. Bill Ackman pulls the plug on Netflix. He sells his stake after losing more than $430 million in less than 3 months. And Vladimir Putin's saber-rattling. Russia test fires a new ICBM as a warning to the U.S. Plus, he claims his forces have captured the port city of Mariupol. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kailey Leinz over in New York. And from a market perspective, Kailey, a lot of focus will be on some central bank speakers later on today.
Yep, you'll have Jerome Powell, Christine Lagarde, as well as IMF Managing Director Kristalina Georgieva, all speaking on a panel around 1 p.m. Eastern Time. So the market certainly will be hanging on each and every word. Now, as for how the session struck out in Asia overnight, it really was mixed. You had Japanese equities higher, but a lot of underperformance coming from Hong Kong and China. The CSI 300 in China down 1.8%. You had a speech from Xi Jinping in which he essentially just defended China's COVID-0 policy, saying that they have to defend people's lives and people's health. And investors are saying, what about defending the Chinese economy? The fact that he didn't really outline any further policy support weighing on Chinese equities today. It really was tech stocks that bore the brunt of the pain. The Hang Seng Tech Index was down about 3.5%, and some underperformers within that included electric vehicle companies, one of them being Li Auto, which warned overnight about supply chain issues stemming from lockdowns in places like Shanghai. They say that will delay some delivery of new vehicles, so that stock was down more than 4%. And of course, Matt, have to do my daily check on the Japanese yen. It is weaker once again against the U.S. dollar today, trading right around that 128 level. We remain around the lowest in 2 decades.
Yeah, I feel like every day you check the Japanese yen,
I
and
do
every
indeed.
day it's at 128. So maybe it'll move a little bit at some point. We are seeing movement in S&P futures right now, up 0.8%. Interesting that Kailey points out EV makers are down in Asia, because one of the big reasons for the gain on futures today is that big EV maker Tesla did so well in terms of earnings, beating on revenue, beating on EPS. So definitely take a look at that in pre-market movers. In terms of the 10-year yield, it's adding about 3.5 basis points right now to 286.70. So rising, but still not back up. You know, yesterday at this time we were looking at 290. We're still not up to that level. Yesterday at this time we were looking at 103 and change on Texas Intermediate crude. We're still looking at that. Right now it's up about 1% from the close. But 24 hours ago, it was the same price as it is now. And Bitcoin as well. Looked the same yesterday. It's a little higher right now, 1.2%, but this has been a strong correlation, or typically is a strong correlation, especially to tech stocks. So if Bitcoin is trading at just about 42,000, maybe tech stocks are going to rise and help lift the rest of the market today as well. Anna, what do you see in Europe?
Yeah, sentiment generally here in Europe, Matt, for risk assets looking pretty buoyant. We have European equity markets in the shape of the DAX and the CAC moving higher by around 1% or so. The London market is weighed down by the mining sector, the basic resource sector, under pressure today as a result of, well, yesterday it was Rio Tinto weighing on the sector. Today it's Anglo-American. A little bit of disappointment around what's being produced there. In terms of the sectors moving higher, we have the aviation sector doing really well. That's on the back of those United numbers that you guys reported over in the United States yesterday. The ECB story is on the move, and this is something to focus on. I put in here the French 2-year yield. This is the short end of the curve really on the move. We see 2-year yields rising in France, in Germany, in Italy, and I could have picked other parts of the Eurozone as well. We also see the euro moving higher, up by 0.7%, has a 109 handle, Matt, which is a bit of a change from recent days. And this is all because we're getting more and more hawkish commentary coming through from the ECB, or relatively hawkish commentary, talking about the possibility of a hike in July, and it is possible, according to Luis de Guindos. He's the latest to make such a statement, and he's the vice president of the ECB. Speaking on the day that Christine Lagarde will talk later, we'll see what she will say, whether she'll add to that dynamic. And here's a couple of companies that have been talking about pricing power this morning, and that story has gone down well with markets. Nestle, the food company, up by 1.2%. Their numbers better than estimates. AkzoNobel, the paints and coatings business, up by 4.4%. Also numbers better than estimates. And both companies talking about pricing power. AkzoNobel actually saying they expect costs to increase in the second quarter, but to come down in the second half. And that's another added dimension to the story there. Just checking on Russian assets for you. A big focus, of course, on Russia and the Russian currency at the moment. We've been hearing from the central bank governor, Nabiullina, and she's been saying that we could see another rate cut coming through. We had the emergency hikes in February and then a cut earlier on this month. We could see another one. She's been reiterating this morning. She's also said that she thinks Russia needs to avoid economic self-isolation. We know that that is part of the direct policy of Western governments to bring about that. But that's an interesting comment made by her today. And of course, there's a lot of focus, Kailey, on the debt over in Russia. We heard from the CDDC, that body that evaluates whether there's non-payment of debt, and they have said there's a possible mispayment here, but there is a grace period, so we have to wait until early May to see whether those payments that were made in rubles come through in dollars.
Yep, we'll all look out for May 4th when that deadline is. Now let's talk about what else we're looking ahead for on today, April 21st. Of course, Hong Kong is scheduled to lift some COVID restrictions, including allowing restaurants to reopen dinner service until 10 p.m. We'll also get some U.S. economic data, initial jobless claims and continuing claims coming at 8:30 a.m. New York time. The Bank of England Governor Andrew Bailey will be speaking at the Peterson Institute for International Economics at 12:30 p.m. New York time. And of course, as I mentioned, Fed Reserve Chair Jerome Powell, ECB President Christine Lagarde, together will be speaking at an IMF event, Matt.
What about weed?
What about what?
Weed. Today is the first day that you can legally buy and sell weed in New Jersey.
Oh, there you go.
Anyone looking for...
I was like, 420 was yesterday.
Yes,
Matt.
good point. I don't know why they made it one day later, and the fish run started yesterday too, but today, New Jersey, I heard from Michael Barr on Bloomberg Radio this morning, New Jersey is selling marijuana legally. Let's get to, well, a 420 fan, Elon Musk. Tesla reported better than expected first quarter results. Musk predicting bumper production growth this year, even though we have these supply chain issues. He spoke on the earnings call yesterday.
We remain confident of a 50% growth in vehicle production in 2022 versus 21. I think we actually have a reasonable shot at a 60% increase over last year.
All right, so no mention, by the way, of his Twitter bid on the earnings call. Let's get more with Bloomberg's Laura Wright, who followed along. Laura, what do we know?
Well, Tesla rallying in the pre-market. It was record profit, revenue up 81% year over year for the period. Elon Musk said he's never felt more optimistic about Tesla, so make of that what you will. Yes, supply chain issues are here to stay for 2022, but Tesla, they've been astute, managing to raise prices for the year in order to offset that. The key question regarding the Shanghai plant, which is now Tesla's key global production hub, supplying not only Asia, but also exporting to Europe. It was shuttered for most of March, but it is back with a vengeance, according to Elon Musk. And those delivery goals, which Elon Musk was alluding to, on track, he believes, for 1.5 million deliveries of vehicles in 2022, and sticking with that goal of 50% average annual vehicle growth.
All right, so Elon Musk is sticking with his goals. Let's talk about another tech stock and someone who's not sticking with it. Bill Ackman abandoning Netflix after a pretty heavy loss. Laura, what can you tell us?
Yeah, buy on the dip, sell on the dip. That appears to be the strategy of Bill Ackman, and it just seems that a 62% year-to-date loss was simply too much to take. He doesn't believe that the changes Netflix are making regarding passwords, and also, they're creating a cheaper service that will include adverts for their customers. That is not enough for the hedge fund manager, so he wants out. But it raises the question of whether this is a precipitous exit, given that direct-to-consumer content is irrefutably the direction of travel for us.
Laura, thanks very much. Bloomberg's Laura Wright pulling together a couple of tech themes for us overnight. Now, back to the geopolitics, and President Vladimir Putin says Russia has seized Ukraine's Mariupol, even as his defense minister said more than 2,000 troops remain holed up in an industrial complex in the strategic southern port city. Russia also says it test-fired a new intercontinental ballistic missile, an ICBM, a move that Putin says would give the United States and its allies, quote, something to think about. Anne-Marie Hordern, Bloomberg Washington correspondent, joins us now in D.C. And any sense of what the United States thinks about this at this point?
Well, it really is clear at the moment that this final siege of Mariupol is underway. And you have President Putin on state TV being broadcasted this meeting he had with his defense minister, Sergei Shoigu. And he said taking control of such an important center in the south as Mariupol is a success. Now, this is so key because this really connects Crimea to also controlling Donbass. So this would give them such a strong foothold and control of eastern Ukraine. We do have an update from the White House saying that the president now will be discussing an update on Russia and Ukraine. We are waiting for potentially more military aid. Our reporting from earlier this week is about $100 million. And this is as the allies are really concerned about Ukraine being able to control parts of eastern Ukraine.
We also had, on the domestic front, Anne-Marie, the administration is going to appeal, or the CDC rather, is going to appeal the overturning of the mask mandate. What does this mean? Because I imagine this is going to take weeks, if not months, in court, and the mandate was supposed to end anyway in a couple weeks.
Yeah, and it's really created a lot of havoc, and also it does feel like a bit of whiplash in Washington in terms of lawmakers unsure how to respond to this, because you're really starting to now toe a line between what the public potentially wants. And Matt, as you say, this could take months, meaning this can go well into the midterm election. What we do know is that the DOJ is going to appeal this, and they have been waiting and say it all comes from the CDC. So let's look at what the CDC has come out with last night in a statement. It is the CDC's continuing assessment that at this time, an order requiring masking in the indoor transportation corridor remains necessary for the public health. CDC believes this is a lawful order well within CDC's legal authority to protect public health. So you're going to see the Biden administration really put this into the hands of the CDC. But what a lot of this comes down to, and why this appeal is, they decided to go for this appeal, which obviously a lot of political pressure on both sides, whether or not to go for it or not, comes down to the future. What if there is another spike in cases? The CDC wants to make sure that they can put a mask mandate back on big public transport.
Anne-Marie, thanks very much. Anne-Marie Hordern in Washington for us. Now, the two candidates for the French presidential election went head-to-head last night in the only televised debate before the final round of the presidential election. That takes place on Sunday. Emmanuel Macron strongly attacked his far-right election challenger, Marine Le Pen, for her links to Russia.
Why did you do it? And I say this with great gravity tonight, because for our country, this is bad news, because you depend on the Russian power and you depend on Mr. Putin.
Meanwhile, Marine Le Pen insisted the French will be better off on security and purchasing power under her rule.
I truly want to make purchasing power the priority of my next 5-year term if the French have confidence in me.
Now, Bloomberg's Caroline Conan joins us now in Paris. Caroline, this is an important debate then, just days before the French go to the polls in the final round of this presidential election. The two going head-to-head. What do we take away from the debate?
The stakes are pretty high, especially for Marine Le Pen, given currently that Emmanuel Macron has got an 8-point lead in the latest polls for this runoff taking place on Sunday in France. And clearly, last night, Marine Le Pen really tried to appear reassuring, to appear more moderate, more mainstream, trying to give away some of her radical views on immigration or on Europe. So Emmanuel Macron really tried to refrain from sounding arrogant or too technocratic. There were a lot of punchlines during the debate on Europe, on Russia. You heard the president accusing Marine Le Pen of being dependent on Vladimir Putin because she had this loan from a Russian bank. Also, Emmanuel Macron accusing Marine Le Pen of starting a possible civil war if she tries to totally ban the headscarf in all public places. So overall, about 59% of the French people who watched that debate last night thought that the current president, Emmanuel Macron, was the most convincing and that Marine Le Pen was still roaring on her project, but she was also seen as more tuned with the daily issues of the French people. So we'll see if this moves a little bit the needles before Sunday's runoff.
All right, just 3 days to go. Bloomberg's Caroline Conan in a beautiful Paris. Thank you so much. And don't miss our coverage of that final round of French presidential elections this Sunday, 2 p.m. in New York, 7 p.m. in London. Meanwhile, talking of Europe more broadly, traders are betting the ECB will raise rates above zero this year for the first time since 2012. That's after a string of hawkish comments from policymakers. Let's get more with Bloomberg's Danny Berger. Danny, are there any doves left?
Look, Kailey, there are doves left, to be clear. A lot of the noise we have heard over the past 24 hours has been from already more hawkish policymakers. But for those keeping track, it's 4 governing council members just in the past 24 hours that have said we could see a rate hike as soon as the start of the third quarter. Now, as I was saying, hawk's gonna hawk. The market didn't move too much, except for around 7:30 a.m. UK time. De Guindos joins that choir, saying that a hike is possible in July, alongside the APP end. Now, he's a little bit more middle of the road, so this did get a market reaction. The market reaction was swift. You saw the euro at one point as high as 0.9% versus the dollar, now around 0.6, but bumping up above 109. At the same time, front end of Europe, those rates also getting pummeled 12 basis points higher on your German 2-year yield at 16.7 basis points, 16.7 basis points. This is the highest on the yield since 2014. So this is a market that is now taking this growing consensus more seriously. That also factors in just generally to the ECB pricing as well. Now we're looking at 75 basis points worth of hikes priced in by December. This would take us not just to zero, Anna, but to a slightly positive level when it comes to ECB policy.
Yeah, the conversation around the ECB moving fast. We'll listen out for Christine Lagarde, amongst other central bank speakers, of course, talking later today. Bloomberg's Danny Berger, thank you very much. Coming up on this program, Seema Shah, Chief Strategist at Principal Global Investors, will ask her about the path forward for global central banks and the emerging crisis for emerging economies. Rising food and energy prices might just be the beginning of a much larger global threat. Read more on today's Big Take story by typing NI Big Take into your Bloomberg terminal. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kailey Leinz in New York. A bit of breaking news coming through on the Bloomberg terminal. The China state energy firms are in talks for Shell's Russian LNG stake. And this is a fascinating story as Shell pulls back from Russian operations, of course, because of the invasion of Ukraine. Chinese companies see an opportunity to get in. Specifically, CNOOC, CNPC and Sinopec Group are in joint discussions with Shell over the company's 27.5% holding in the Sakhalin 2 LNG venture. So we'll watch that. We will watch how China plays its relationship with Russia right now. Let's get back to the markets, though. Dana El-Bartaji joins us, Bloomberg Managing Editor for Credit. And Dana, I really want to start with you on the ECB story that seems to be very quickly on the move. We heard from Danny Berger about this, and I was talking about the move in the short end of the German curve, the French curve, and in the euro. Traders now betting that we will go beyond zero on the interest rate here. In the Eurozone this year. 3 hikes now priced in. This is moving quickly, it seems.
Absolutely, it is. And in fact, I mean, you can almost say that this is quite slow in regards to the other central banks in the world. I mean, everyone knew that inflation is a problem. And I think people had suspected that the ECB would slow down its dovishness and become slightly more hawkish. And now, of course, we don't have concrete evidence of this just yet, but it seems to be building up and people start to be more convinced that the ECB will act. Now, this, of course, is going to have an impact across European markets as a whole, not just rates. Of course, I mean, bonds have not priced this in completely. The company bonds are still at risk of a sell-off here.
All right, but of course, the ECB is still a huge laggard when you look at expectations for where the Fed ends the year at 225, 250, expectations where the Bank of England ends the year at 1.5%. The ECB is going to be, 50 to 75 basis points?
Yeah, exactly. And that's why the euro might still be the funding currency of choice. The funding costs here are still very low. And even with these changes, they're still going to be much lower than their peers. So it's very, very likely that you will find more and more issuers that will come to Europe and to take advantage of these lower costs. However, this zero rate environment is leaving us. And that is going to have an impact. But on a global scale, exactly as you said, it is still a lot slower than the rest of its peers.
Okay, Dana El-Baltaji, thank you very much for your thoughts. And for further market analysis, check out MLIV Go. That is the function to use on your terminal. That's where you'll find the Markets Live blog. This is Bloomberg.
Now, keeping you up to date with news from around the world, here's the first word. China's President Xi Jinping has defended his country's reliance on lockdowns to fight coronavirus despite mounting economic woes. In a speech, Xi reaffirmed the underlying goal of minimizing deaths. China's in the midst of the worst COVID outbreak since the beginning of the pandemic. Coming up, we'll talk about the economic implications of China's lockdowns, as well as the case for technology stocks after earnings from Netflix were sour. Tesla, though, beating expectations. Seema Shah, chief strategist at Principal Global Investors, will be joining us next. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. Tesla shares jump in pre-market. Elon Musk's electric vehicle company reports a record profit and forecasts a big jump in production. Shares are rising in pre-market trading. Meanwhile, Musk's Boring Company raises money at a valuation of nearly $6 billion. Bill Ackman pulls the plug on Netflix. The billionaire investor sells his stake after losing more than $430 million in less than 3 months. Ackman says he has learned from past mistakes to get out of bad bets early. And Russia fires a new ICBM in what's seen as a warning to the United States. And President Vladimir Putin declares that his forces have taken the Ukrainian port city of Mariupol, even though his defense minister says Ukrainian troops are still holed up there. I'm Anna Edwards in London with Matt Miller and Kailey Leinz in New York. Matt, quite buoyant markets here in Europe. Certainly the markets that aren't focused on basic resource stocks are doing pretty well today. The earnings story front and center here in Europe. What's in focus for you?
Yeah, we see, commodities prices rising. That's why basic resources stocks are doing well. But here it's really about Tesla. I'm just obsessed with the fact that they made, $700 million selling their credits for zero carbon, for zero emissions. It's just awesome, and it's helping to power the rally in futures because it's such a big tech stock, over $1 trillion in market value, and it's helping to boost the entire market here. Also, investors feel comfortable enough to sell the perceived safety of government debt, so we now see the 10-year yield rising a little bit more than 4 basis points. Still not to the same level it was 24 hours ago, yesterday at this time, but 287.47 is a pretty high level that we can talk about. NYMEX crude at 103.28, so this is one of the gains in commodities that we're talking about that's helping boost over there, right? BP, Royal Dutch Shell, such a commodities-heavy index, certainly the FTSE and the rest of Europe as well. And Bitcoin up more than 1%, 41,917. So gaining slowly but surely back again. Maybe it's not a crypto winter. What do you see, Kailey, in terms of pre-market movers?
Well, I have to talk about Tesla even more, Matt, because, of course, as you said, that's really driving a lot of the action at a broader level today because it's a pretty sizable move in pre-market trading, up nearly 7 full percent. And remember, this is a $1 trillion company, so that moves a lot of weight. Analysts really positive on the quarter, especially how optimistic they sounded on the forward outlook, even in the face of supply chain issues that they say could last throughout the remainder of 2022. And of course, it wasn't just Tesla that reported after the bell yesterday. We heard from United as well, and they say they will return to profitability in the current quarter, the second quarter. It would end a streak of 9 consecutive quarters of losses. So that stock is up about 7.4%. It's giving a lift as well to American Airlines, which will report before the bell today. So just a couple hours from now, it's up 5.5%. But then wanted to make mention of Netflix as well, because of course that was the story of yesterday, and a 35% drop for that stock. No dip buying coming in today. It's down another 0.7% in early hours. And we know Bill Ackman has now abandoned his stake, a $430 million loss on that, Anna.
Yeah, as we said in our headlines, he's learned from his mistakes and to get out early. You mentioned there the United story, the airline story, and that is actually having an impact on this side of the Atlantic, Kailey, as well. So we see buoyancy for European equity stocks up by European equities up by 0.4%, and aviation stocks are at the forefront of that. So travel and leisure, the best performing sector here in Europe today. The worst performing is that basic resources sector, because here, from a European perspective at least, disappointment around Anglo and the results there from Anglo-American, that is weighing on that particular market. The euro in focus. We had 2-year debt in focus as well, as we talked about in the first half hour of the programme, as the ECB conversation turns a little bit more hawkish. Today it was the turn of Luis de Guindos, the vice president of the ECB, and with his commentary that a hike in July is possible, that has certainly added to some upward momentum for the euro. 109.19 is where we trade. A couple of earnings stories for you. This one is all about pricing power. 1.2% higher for Nestle. It seems we're willing to pay up when it comes to coffee and when it comes to chocolate. They are cautious about costs in the months and the quarters to come, but certainly the numbers going down well with investors and beat estimates. Continental, I put this in. This is a supplier to the auto sector, of course. I put this in because it looked like a negative story. They've downgraded their guidance. They're concerned around costs, but something in there went down well with investors, and the stock is still moving higher, up by 3%. A quick check on Russian assets. We've seen the Russian stocks down by 0.1%. A lot of focus on central bank policy there after a big hike in rates in February, a small cut in rates in early April. We've heard from the central bank governor that we could see another rate cut coming. We also have heard from the CDDC on the subject of Russian debt, so the Credit Derivatives Determination Committee, and they've said that there could be a non-payment event that could trigger CDS, but we have to wait until early May to get real clarity on that after the end of a grace period, Matt.
All right, excellent. So we have a look at Russia there. Let's take a look at what's going on in Europe, what's going on in England, and what's going on in the U.S. Because I've got a chart that shows what the central bank movements are expected to be. I was talking about this earlier with Dana El-Baltaji. Let's talk about it with Seema Shah. Now, the ECB isn't going to be nearly as high as the rest in terms of the 2022 terminal rate, I suppose we could call it. Chief Strategist at Principal Global Investors, Seema Shah, joins us now. Seema, what does this mean? The fact that the ECB, they're prepared to get a little bit more hawkish. For them, it seems really hawkish, but nothing compared to the bigger central banks.
Hi, Matt. Yeah, I think that's key, is even if the ECB is becoming a little bit more hawkish, and we're going to see rate hikes this year potentially, that would still leave them so significantly behind the US. But in terms of your relative trades, in terms of your currency perspectives, it doesn't change too much. But I do think the key thing is it does introduce a fair amount of volatility at a time that I don't think Europe can really afford it.
Okay, good morning to you, Seema. If I look at the GMM function on the Bloomberg terminal, I can see that the French 2-year yield is higher, the German 2-year yield, the Italian 5-year yield. It does seem the short end of the curve is responding to this kind of commentary coming through from the ECB. How quickly do we see these yields move higher then, do you think?
I think it could be quite rapid, but really it depends on how far we're likely to see them. And I think, the comments that we've seen from the ECB officials in the last few days are really, really important, because we have to think that they, just like the Fed, will be aware of how much volatility they're going to introduce into the market with these comments. So these will have been well thought out, and I think they're giving us a very clear signal. But at the same time, are we really going to see rates move significantly higher? So a 50 basis point move in the next 6 or 7 months or so isn't going to move yields too far, considering they've already moved significantly in the last few weeks.
How much do we really listen to central bankers, in the best sense of the word, on this subject when there is so much uncertainty about how the Eurozone economy performs, and in particular with geopolitical questions and political questions hanging over the Eurozone economy around the possibility of embargoes of more energy products, and there's nothing certain about that. But if we saw that, the Eurozone economic story would change so substantially that things would be very different for central banks.
And I think that's absolutely key. I know from my perspective, perspective, I have been very much of the idea that the ECB is unlikely, unlikely to hike this year, given the deteriorating economic outlook. And as you said, it's risk. We don't know what's going to happen over the next 6 months. But I do think that the ECB officials, some of the commentary in the last few days have been so clear and indicating that actually they need to put the real economy behind them when they're thinking about normalization. And that is a very clear signal.
All right, Seema, so where does that leave Europe relative to other markets like the US for you?
Yeah, still for us, the US is the clear outperformer from here, from an equity market perspective. You know, we know that the US is less vulnerable to this geopolitical conflict than Europe is. We know that the risk outlook for Europe is that much greater. And actually, we can see a potential recession in Europe just this year, whereas for the US, it's a little bit further out. So from that perspective, it doesn't change too much.
But the US, of course, Seema, also is heavily weighted toward technology. To be positive on the US, do you also have to be a little bit more optimistic on some of those growth names?
I think that is important. And certainly from our perspective, we do think this is still the time to have a slight overweight to some of these tech firms. But importantly, it's a mega cap tech. You have to differentiate at this stage. It's not really about the non-profit ones, which I think will struggle in this kind of environment. For the mega cap tech, you know, yes, rising bond yields, high bond yields are something of a challenge. But we also think that bond yields are quite close to the topping out. We've been talking about in the market most recently about inflation likely to have peaked. So from there on, I think the situation for big cap tech becomes a little bit easier, and we have to think about quality. It's more than large cap. It's really about quality firms, one of the big balance sheets and pricing power.
Yeah, we're looking at the 10-year yield right now. The chart is striking. Over the last 12 months, just climbing up almost to 3%, Seema. Yesterday, we heard Bank of America say they're going long the 10-year and expecting rates to finish off 2022 at 2.25%. What do you think about that?
Yeah, we're similarly in line to that. So we're thinking by the end of the year around 2.4%. You know, we do think, look, inflation is extremely high, but we do think from here, within the next couple of months, unless there's a major upset within the supply chain dynamic, that we should see inflation starting to come down slightly. And then when you start to think that, look, if there is a chance of recession in the next couple of years, it's quite difficult to see US 10-year Treasury yields move sustainably above that 3% point.
Seema, thank you very much. Seema Shah, a chief strategist at Principal Global Investors. Thanks for spending time with us here in London and on Bloomberg TV. Now, coming up on the program, Elisabeth Braw, senior fellow at the American Enterprise Institute, will get her perspective on the victory that President Putin is declaring in Mariupol, even though there are still, of course, Ukrainian troops and civilians present. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. You're looking live at the principal room. Coming up later today, United Airlines CEO Scott Kirby. That's at 9:30 a.m. in New York, 2:30 p.m. in London. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Kailey Leinz with Matt Miller in New York and Anna Edwards in London. Well, Russia's President Vladimir Putin has declared that his forces have seized the key Ukrainian port city of Mariupol. It would be the biggest city taken during Russia's 2-month invasion. Still, Russia's defense minister says more than 2,000 Ukrainian troops are still holed up in an industrial complex in the city. Joining us now is Elisabeth Braw, senior fellow at the American Enterprise Institute. Elisabeth, great to see you as always. If Mariupol has fallen, what consequence does that have for the war more broadly?
It would be a major breakthrough for the Russians. Mariupol is located at the end of a strip of land going all the way, so it has sea access, and then the strip of land goes up via the two breakaway republics of Donetsk and Luhansk, and all the way up to Kharkiv. And if Russia has indeed seized Mariupol, this is a major breakthrough in Russia's efforts to securing this strip of land, which could then be presented as a victory in this war. And we should remember that the 9th of May is when the Russian leadership wants to present some sort of victory to the Russian public.
So if they secure a land bridge, so to speak, to the Crimean Peninsula, will they consider that? Will Putin consider that enough of a victory to cease fire?
That is likely. So we have to remember that originally Russia went into this war calling it the special operation to denazify Ukraine. But there is no doubt, I think, now in the Kremlin that Russia is not going to be able to change the whole of Ukraine. But winning this or conquering and holding this strip of land could be presented to the Russian public, which of course doesn't get neutral information, could be presented by the Russian government as a victory. And we should remember that Crimea at this point sits sort of isolated there. And so if you're able to tell the Russian public, your voters, your supporters, that now we have this strip of land that connects Crimea to all the way up to the Russian border, that would be something that would be easily sellable.
You know, we hear from Russian officials that it's possible Putin uses tactical nukes. On the other hand, yesterday we saw the testing of an intercontinental ballistic missile capable of carrying the big stuff. How much of a nuclear threat is Russia right now?
So Russia, like the United States and UK and France, doesn't have a no first use policy, meaning that if it feels its existence is threatened, it reserves the right for itself to use nuclear weapons. Still, I think it's unlikely simply because the risks for Russia would be so high because if you use nuclear weapons, then nuclear weapon states are likely to respond with nuclear weapons. That would be a phenomenal disaster, an incredible disaster for Russia. So yes, they keep talking about it, the Russian, various Russian spokesmen and women, but I think it's highly unlikely.
Elisabeth, give us your insight into what's taking place in Finland and in Sweden right now. Certainly Finland in focus this week as we saw Finnish lawmakers begin debating NATO membership, and that process now looks to be, well, is it in process? Is it in train, and how long will it take?
What we're seeing in Finland is absolutely remarkable. The Prime Minister Sanna Marin a few days ago obviously announced that Finland will now spend a few weeks deciding whether to apply for membership, and they are wasting no time. This week, Parliament has been debating NATO, and it's incredible really to see the shift in public support and now parliamentary support for NATO membership. 112 out of the 200 members of the Finnish Parliament now say they are in favor, and only 43 say they are against, and 33 are undecided. So it's a remarkable change. In essence, now there is a majority in the Finnish public and in the Finnish Parliament for NATO membership. We should remember that the Prime Minister Marin said that the government wants as wide support as possible for this step if they do take it, which now seems likely.
Yeah. And this would seem to change the military balance in the Baltic Sea quite significantly, Elisabeth. And how would you expect Russia to respond to that?
A Finnish membership of NATO would change the balance in the Baltic Sea region, and if Finland joins, Sweden is highly likely to join as well. And they both have significant military capabilities, especially Finland, with its long experience of guarding a very long land border with Russia. Sweden has excellent naval capabilities, which would be a huge asset in the Baltic Sea itself. Russia is likely to roar again and issue threats against Sweden and Finland and NATO, but at this point, it's militarily tied up in Ukraine. And I think it's highly unlikely that it would be able to expend any military effort on Sweden and Finland, even if it wanted to.
Elisabeth, finally, Vladimir Putin earlier this week was talking about Russia's economic resilience, saying that the economic blitzkrieg failed to work. But of course, Europe has not actually acted on Russian oil and gas. If that were to happen, how, if at all, would that change the calculation for the Kremlin?
Yes, what has happened so far is that Russia has been able, ordinary Russians have been able to keep living their lives and being able to buy food and so forth. So then one could say, as Putin does, well, look at that, your sanctions didn't work. But of course, sanctions are never particularly effective in the short term. If European countries, especially Germany, were to cut off gas imports, that would have a major impact on the Russian economy. Germany just announced it will cut off oil imports from Russia, but that's a smaller part of what it imports from Russia. So that is the big decision that we are all waiting for. Then again, Germany would, as the government keeps saying, Germany would suffer more itself if we were to cut its gas imports from Russia than Russia would as a result of such a move. So it's a very delicate balance in Germany, and we are all watching very closely what the government will what it decides to do, because it's a coalition government and there are very different opinions even within this government.
Right. I think Germany certainly moved, and the EU has moved on coal. We will see what they decide to do around oil and around gas. We spoke to the German finance minister, and the suggestion was they were open to moves on oil, but we'll see where that develops. Elisabeth, thank you very much for joining us. Elisabeth Braw, Senior Fellow at American Enterprise Institute. Coming up in the next hour, Valdis Dombrovskis, European Commission Executive Vice President. That is at 6:30 a.m. in New York, 11:30 a.m. in London. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller with Kailey Leinz in New York and Anna Edwards in London. We are joined now by co-anchor of Bloomberg Surveillance, Tom Keene. And before we look at your single best chart today, Tom, let's get to Europe, because we've just had headlines cross from Valdis Dombrovskis.
Well, we do, and it's a simple headline. Russia closes some Estonia, Latvia, Lithuania consulates, and this is the tension in the Baltic states. I mean, all the focus is on Ukraine. The former Prime Minister of Latvia, Mr. Dombrovskis, will join us now, his service in Brussels and with the EU. And I would say that all of a sudden it becomes a more timely conversation, Matt, because we will speak to him, of course, of the actions of Sweden, as you were just talking about, catching up with Finland on what do they do in their future.
And you are never far away from a chart, Tom Keene. So tell us what is on your mind today. I believe the dollar.
Yeah, it's a dollar. It's in honor of what we see at IMF and World Bank as well. And it's a different view of the dollar. This is how the real world looks at it. Economists look at it as inflation adjusted, which is fine, but they look at it inflation adjusted. Here it is nominal. And the bottom line is, you see in 1985, the massive surge in the dollar, an incredibly strong dollar as well. And, I'm going to give it over to you. I've got some major audio troubles here. What it is a resilient dollar going up. Anna?
All right, Tom, I'll pick it up there. Thank you so much. Perfectly delivering a chart despite some audio issues. Co-anchor of Bloomberg Surveillance, looking forward to your coverage coming up in just a few minutes. Now, coming up throughout the day, let's take a look at what we're watching. I will be watching some important speakers at 1 p.m. Eastern time. You'll have Fed Chair Jay Powell, ECB President Christine Lagarde, and IMF Managing Director Kristalina Georgieva all speaking in a panel debate on the global economy. My question is, Jerome Powell basically told us that the Fed was going to move 25 basis points in March. What does he have to say about 50 basis points in May? Could he solidify that for a market that has now fully priced it in? And with Lagarde, how much does she agree with the chorus of governing council members, Matt, who have come out drumbeating toward July in recent days?
Yeah, those people are pretty important. But I'm watching one of the most important figures in the world. In fact, I was reminded by Elisabeth Braw, we just had her on. She tweeted earlier, happy birthday to an indefatigable public servant. I often poke fun of the UK because most of my best friends are British. And I spent some of the best years of my life living in London. Happy birthday to Queen Elizabeth. She turns 96 today, and I believe, Anna, correct me if I'm wrong, has she been on the throne for 70 years now? I see that Mattel has issued a special edition.
Well, let's just clear that up.
No, Mattel has just issued a special edition Barbie doll to mark her platinum jubilee.
Well, I'm sure that will be very popular in some circles. I should point out, in my diary, it's listed as June, but that's because she has two birthdays.
She has an official birthday
that's important
in June, right? Yeah.
to note. So happy birthday to her. Maybe I should have been focused on that, given I am here in London. But there's also other serious business to watch, and we're watching what's happening in Ukraine, of course, as we do day in, day out. The focus very much on Mariupol. The Russians have said that they have now taken that city under Russian control, but we know that the Azovstal steel plant still has, or the Ukrainians say, at least 1,000 civilians there and troops. We'll focus on that as well. This is Bloomberg.